PayPay is a leading fintech company in Japan, a mobile payment platform. It was founded in 2018 as a joint venture between SoftBank and Yahoo Japan, each holding 50%. It has quickly become one of the most popular digital payments in Japan. PayPay charges 3.6% transaction fee, lower than traditional bank fee, such as a flat fee of around $2 for domestic and around $30 for interbank transactions, regardless of the transaction amount. Small businesses love PayPay because of the percentage-based transaction fee. PayPay has offered incentives to drive the adoption, such as waiving transaction fees for merchants during a certain period and cashback campaigns for users up to 100%. In 2021, the penetration rate of digital payments in Japan was around 51%, quite low due to the strong cash-based culture. PayPay has revolutionized the way people make payments, making it faster and more convenient than ever in Japan. It reduced the risk of crime by easy tracking. PayPay has made it possible for small businesses to compete with larger ones. It uses QR codes for transactions, AI tag for consumer experience, and open banking APIs for collaborations. Traditional banks in Japan are reluctant to catch the fintech trend. Several banks have partnered with PayPay to link their bank accounts. Mega banks including Mizuho and SMBC, regional banks including Lisona Bank. Other traditional banks, however, launched their own digital payment platforms to compete, such as MUFG Pay, Rakuten Pay, and LINE Pay. Some traditional banks also thought about innovations. They added the real-time payments on their own apps. Let's see, Japan Post Bank. Well, governments are quite supportive in promoting cashless environment. On the other hand, they are also trying to implement some new regulations to ensure the safety. Although PayPay has been at a loss during the past years due to the heavy investment to catch the capital market share, till last year, it has gained 40 million users out of the 126 million population in Japan. PayPay is well positioned for continued growth and success.
In 2019, Alibaba ranked as one of the top 10 companies in the world in terms of market capitalization. In the past few years, Alibaba has expanded into areas related to financial services such as digital payments, investments, consumer financing, and credits. We will use Alibaba as an example to see the challenges they pose to the banks. It accelerates the trustworthiness of online transactions and offline payments. The hosting service as a third party gives consumer trust and is the key to Alipay's dominant role in online payments, and banks are hardly to that. For offline payments, Alipay has swept through Chinese cities at all levels in the past few years, from luxury stores to vegetable markets. Scan and pay has become the trend. Besides, Alipay makes cross-border payments more cost-effective. 60% of Chinese tourists choose to use Alipay when traveling overseas. Alipay has become more than 80,000 offline foreign merchants and over 1.2 billion users. It gives users favorable exchange rates. On the other hand, Chinese tourists can use Alipay for quick tax refund, which greatly improves the efficiency compared to used bank cards. And thirdly, the Ant Credit Pay was launched in 2015 to be used as a virtual credit card. Unlike banks, Alipay makes it very easy to use. First, you can use it whenever you want and turn it off when you decide to control your spending without paying any annual fees. Secondly, you can get directly access to the maximum quota set by Alipay. Most importantly, Alipay has built an ecosystem that can reach into every aspect of users' life. Compared to banks, Alipay has transformed from a payment tool to an open digital life platform. Users can pay their utility bills, order foods, and buy financial products on it. Alibaba also explored the SME financial market. My bank has served over 17 million SMEs and it disbursed 3 trillion RMB in loans. My bank clearly has some advantage over banks in this area, that is, a better control on cost.
WeBank is China's first digital-only bank, serving over 340 million individual customers and 2.7 million small businesses, many of which have no traditional credit record. Founded in 2014 and backed by Tencent, WeBank target unbanked and underbanked individuals and SMEs with financial services that include loans, deposits, and investments. Most impressive is that WeBank had operating revenue and net profit grow by 35% and 38% respectively year over year in 2021, with a non-performing loan ratio of 1.2%. To put these numbers into perspective, WeBank's profit account for over half of all the profits posted by privately operated China banks in 2021. Part of the secret to that growth is related to the fact that WeBank has access to over 1 billion active users of Tencent's social network WeChat. This gives WeBank access to a massive prospective universe, along with mobile data that is used to evaluate the credit risk of potential borrowers. And with a combination of data and mobile technology, WeBank provides quick and easily accessible services to retail customers and small businesses that are often ignored by state-owned banks in China. By looking at everything from rent to utility bills payments to how people use their mobile device, WeBank built models that eliminate the highest risk consumers and small businesses, while creating financial products that are customized for these segments, such as short-term, small-dollar loans, app-based payments, and digital investments options. In many instances, WeBank provides access to financial services early in a consumer's or small business financial life cycle, creating loyalty and building the foundation for an extended relationship later by using data collected on the segment's income, spending habits, needs, and wants.
In the Philippines, our chosen fintech company is Mint. Mint, or Globe FinTech Innovations, is a partnership between Globe Telecom, a major provider of telecommunications services in the Philippines, Globe's parent company, Ayala Corporation, one of the oldest and largest conglomerates in the Philippines, with diversified business interests, and Ant Group, an affiliate of the Chinese conglomerate Alibaba Group, which also owns the largest mobile digital payment platform, Alipay. Mint's 5 key services includes payment, remittances, loans, business solutions, and platforms. Mint invents new solutions to solve important problems, perfecting those solutions, and delighting its customers. Founded in 2015, it operates 2 fintech companies, GCash, a micropayment service that transforms the mobile phone into virtual wallet for secure, fast, and convenient money transfer, and Fuse, a tech-based lending company that enables Filipinos to get microloans to business loans without the traditional requirements set by banks and other lending institutions. GCash was first launched by Globe Telecom in 2004, offering SMS-based domestic money transfer that does not require bank accounts or cards, considering 80% of the Philippine population were unbanked or underbanked at that time. Users were allowed to convert their cash to electronic money via cash-in and cash-out outlets like mom-and-pop stores with a transaction fee of 1 peso. Now, GCash boasts it has more than 55 million registered users. In 2021, it registered its gross transactions to $74 billion from $23 billion. It has raised $475 million through series of funding. Mint closed its last funding round in 2021 from a venture series unknown round. Thank you.